Well, the headline inflation reading was welcome news to investors, but digging a bit deeper into the data, it shows that location is key when it comes to price moves. Julie Hyman is here with a closer look. And Julie, taking a look at some of these numbers, it's clear that the pricing pressures is not even across the country.
No, it is not. I guess location doesn't just go for real estate. There's a pretty big gap here. In the Northeast, we saw the smallest increase in inflation year over year at just 2.2%. And then that ranges up to a high of about 3.5% in the Western region. Those are sort of the big regions that the BLS looks at when it is assessing these different pricing pressures. But then if you dig into specific cities, it is really disparate, the size of inflation that we are seeing. And that goes all the way from the highest inflation that we saw over the month in the Miami region. And it's not just Miami itself, it's Miami, Fort Lauderdale, West Palm. So really the whole southeastern Florida area with that 6.9% increase, Detroit, Michigan, and environs as well. Seattle, Washington, and again, that includes Tacoma, Bellevue, so sort of the bigger metropolitan area, and same goes for Atlanta, Georgia. So those were the areas that had the highest CPI on a city-specific basis. And then the lowest CPI, urban Alaska, go figure, actually saw a decrease in inflation, a decrease in prices, I should say, of 3.3%. Houston, Texas, that bigger area, the Baltimore, Maryland metropolitan area, and then San Francisco also seeing relatively small increases compared with overall, you guys.
So, Julie, what do you attribute that disparity to? Why are we seeing such a wide divide?
You know, I've been trying to sort of dig into this with economists since we got the numbers. There are a couple of different potential explanations. Part of it just has to do with economic growth, right? That we do see uneven GDP rates around the country. So prices are somewhat tied to that. That's what one economist floated to me. And then there are also specific things tied to insurance, particularly in areas like Florida. Our Rick Newman actually recently wrote about this issue specifically for Florida. If you look at the average insurance premium in Florida for homeowners, $6,000 per year this year. That compares with $1,700 nationwide. Now, some of that has to do with the climate of Florida. We're seeing that effect in places like California as well, that insurance premiums are going up because there is more climate-related damage that's been happening. Some of it is specific to Florida. There have been specific fraud instances there that have actually driven out some of the insurers who used to do business there. So that's kind of part of what's going on there, but there's definitely the bigger climate issue here that is pushing up insurance costs in some areas. It's unclear if that's sort of what's directly impacting the numbers for this month. That is a longer term issue that is going to affect pricing pressures around the country. That's something Joe Brusuelos of RSM also highlighted when I was trying to dig into why we are seeing these differences.
A very important point to point out there. All right, Julie Hyman, thanks so much.